What's going on, guys? I want to show you guys a little strategy that I like to use. Now, if you are a member of the Discord, you guys know I trade the 20 SMA, use it to scalp very, very frequently. I know a lot of you guys in the Discord as well use it along with me, but this is just for everyone else that's on YouTube, or maybe you found my video through any other avenue that's out there on social media. But with that kind of being taken into consideration and account, what we're going to be going over here is the 20-day moving average on the 5-minute time frame, and I'm going to show you guys what kind of confirmation you guys are looking for, when you guys should be taking profits, what you should be setting your stop loss at, and how you can kind of use this strategy and use it in your arsenal. Okay, so I'm going to trade 3 to 4 different strategies on a day in and day out basis. I'm looking for those precise and exact setups, and when those setups present themselves, I'm definitely going to push my chips to the middle of the table, and I'm going to go ahead and take a trade. So if we kind of look at what Tesla did off the open today, Tesla's up 6.5%, $8 on today's session. If we look at the 6:35 a.m. Candle here, we can see a big engulfing candle that took out pre-market highs. So if we kind of see this here and we see it start to close over this 20 SMA, all we're going to do is wait for confirmation of that high wick. So for example, this is the first close at 6:35 a.m. over that 20 period moving average. We do get a pop over that, is followed by a pullback. Now, you may be thinking to yourself, well, what if I was to get into this trade and immediately be going to draw down and we close red? That's completely fine as long as you understand what your risk is. So there's 2 ways that you can sort of play this. You can play a little bit more tight to the vest, where you're going to give yourself a smaller risk, a smaller stop, right? And that's going to be using this 5-day moving average on the 5-minute time frame. That's the green line that you see here. Now, this purple line here is the 20 SMA. This is my max pain. So for example, if we were to get into this trade at 6:40 a.m. and we close below the 5-day moving average and the 20-day moving average, I have to take that loss and move on and look for another setup. If you're going to hold a tight stop loss, then if we were to close below the 5-day moving average, that's your stop. If you're going to give it the max pain, then when we close below the 20-day moving average, that's your stop. As long as we stay trading over that, all of this other stuff doesn't matter. The red candles, they don't matter. The sideways action, it doesn't matter. As long as we are over our pivot point, we are over our 2 stop losses, we're going to remain in this trade. Now, we're going to take profits at the next major area, key area of supply. So if we kind of look at the 137.29 pivot here, we got that confirmation. We do run up into the next area of supply, which is this upper Bollinger Band. That price is sitting at around 139. So a price from 137 to 139 is about a $1.50, $2 move. Your macro area on the 5-minute time frame supply zone is the linear regression. That price is sitting at around 140. Okay, so from a price of 137.29 to 140, you're looking at $2.70 worth of profit. Now, depending on how big your account size is, how many contracts you're playing, this is a one and done trade altogether, meaning that you could have taken 5, 10, 15 contracts and been done for the day. Now, in fact, I did take a trade on this off the open here on that 5-minute play over the 20 SMA, and I made about $1,000, give or take, 900 and something dollars. In a very short period of time. That's the power of options, and that's the power of, having a setup, and when the setup presents itself, taking that setup. Now, you may be thinking to yourself, well, what if I missed the move, right? What if I hesitated, I didn't take the move, and now I don't want to chase? What could I do? There's a part 2 to this same overall strategy that you can use, and it's using larger time frame, and it's using the 1-hour candlesticks. So a lot of people do not like to trade the open because of the volatility and the ups and downs. And I understand it, because sometimes you can get into a move, it goes in your favor for a couple of minutes and then immediately pulls back, and you feel like you're getting shaken out of the trade. Now, what you can do is use the hourly time frame. I'm using Thinkorswim. I'm also have extended hours on. So the light gray box that you can see is all of my after hours and pre-market, and the dark gray boxes are my market hours trading. So my 1-hour candles are going to include the 30 minutes of pre-market, and the market opens at 6:30 here in California. So from 6 to 7 a.m., that's my first hour candle. So what I'm looking for here is if my first hour candle is including some pre-market data as well as the opening range data, realistically, this candle is going to close 30 minutes after the market opens. Now, if we take a look at the 1 hour candle and we have room ahead, meaning there's no upper supply here, the moving averages are fanned, we don't have a lot of commotion and traffic above, all I'm going to do is let 30 minutes pass. I'm not going to take any trades. I'm going to let the price action do its thing. I'm going to let it put in a high. And guess what? If it does decide to confirm that high, I'm going to go ahead and get long, okay? What you can do here is use the rising 5-day moving average as your stop. Now, I'm not going to say to use the 1 hour candles and use the 20 as your stop, because that's a huge risk from the top, from the highs of 139 all the way to the lows. If we were to lose the 20-day moving average is a price of 134. So that's, you know, a little bit more risk than I would be willing to take on a 1 hour candle trade like this. Understand that these trades are going to take a little bit longer to develop, but there's going to be a bigger potential upside. Now, if I was to use the 5-day moving average as my stop, then I'm looking at a stop of around 137.50, okay, which is still, it's not the best, it's not the tightest, but again, you have to take it for what it's worth. We're playing the 1 hour candles here, so we can simply scalp these moves and take these candles, or we can kind of play a little bit smaller risk and use the 5-minute time frame. Just understand the 5-minute time frame can chop around a little bit more before you get some clarity here. So 139.16 was your pivot. You let 30 minutes pass by. As soon as the next hour candle opens up at 7 a.m., if that hour candle can take out the previous hour's highs, that's your indication to get long. You're going to use a 5 SMA as your stop, and you're going to go ahead and ride it out and take your profits along the way. I hope this video helps. If it did, make sure to join the Discord, get involved in the chat, get around other people who are going to be trading with you on a day in and day out basis. I've got a ton of information there, countless videos on training. I put my watch list on there, so forth and so forth. If you want to check out my website, it's evolutiontraders.com. You guys can be a lifetime member, this, that, and the other. But until next time, guys, I'll see you guys all in the next video. Make sure to smash the like button, hit the subscribe, and I'll see you guys all later.